Welcome to the Seven Figure Leaders podcast. This podcast was created to celebrate the success stories of seven-figure business owners, giving them a platform to share their insights and lessons learned in order to inspire other business owners. As well as that, it's an opportunity to build new connections. So if you're a seven-figure business owner or someone who works with seven-figure business owners and you're looking for introductions to potential stakeholders, strategic partners and clients, I'd love to hear from you or have you on as a guest and see if I can help make those connections for you. Just go to synergycfosolutions.co. That's synergycfosolutions.co and click podcast. And there you'll find the link to apply. Today we've got Joanne Bell, founder and managing director of Bell's Accountants. Welcome, Joanne.
Hi, Tom. Thank you so much for having me.
Pleasure to have you. So best place to start, why don't you give us a little bit of a background as to who you are and how you came about founding Bell's Accountants?
Certainly. So my business, as I'm sure is the case for lots of people, was kind of an accident initially. So I got into quite a lot of debt in the last credit crunch of 2008 when the property market crashed. I'd bought a flat, and typically back then it was all sort of self-cert mortgage. I was 19, I think, something like that. And just got this mortgage signed off with a broker in the back of an estate agency office who got me 105% the value of the property with Santander. And because everybody knew back then that you only had to live in it for 6 months and it'd be worth 100 grand more than you paid. And obviously in that particular year, that was not the case. So, you know, the housing market crashed. The partner that I was with at the time was made redundant. So what happened was I started doing private work. So to basically supplement my employment income. I think they call it now a side hustle. It didn't have that cooler name at the time, but effectively I was working all sorts of evenings and weekends, driving around in my car, picking up bags of receipts from gardeners, builders, taxi drivers, anyone who needed sort of a simple self-assessment doing, really. But, you know, I did a good job. I made sure to advise them exactly what they could claim for and how to minimise their tax. And of course, what that led to was people telling other people, and we grew from there. I then met a business mentor at a networking event, which I think it's really, really important to have a mentor who's sort of been where you want to go and done what you want to do. And she really helped me to make the business into, you know, a professional outfit. So to get an office so that we had somewhere to meet with clients, and I wasn't sort of spending all that time traveling, and how to know when I was ready to take on my first employee. And then since then, really, it's grown a combination of organically, but also via a series of acquisitions. So I've purchased a number of businesses from retiring accountants, which has presented a whole host of new challenges.
Okay, well, thanks for that. And so where are you now then? What does Bell's Accountants look like now?
So now we are about 38 staff, I believe. We are currently based over 5 sites, but we are looking to consolidate to save costs because there's so much sort of working from home now. It's not as needed, the physical presence. We're about 2.2 million in gross recurring fees, and I'm doing a lot more sort of consultancy work. So I'm much less involved in the day-to-day producing accounts and tax returns, but I consult with those clients who are really very growth orientated and really keen to grow their business quickly or look to do acquisitions in the way I've done. Obviously, a lot of that advice comes from my own personal experience as well as my expertise as an accountant. So it's those two things combined, really.
Absolutely. And so you talked about a lot of the things there, going from zero all the way through to where you are now, organic and inorganic. What would you say the main challenges are that you've faced along the way, or the biggest ones that stand out in your mind?
Really good question. So I think keeping the personal touch while you're scaling a business is always really challenging, because I went from it was me and me alone, and I was the only one interacting with those clients, and they didn't have to explain their whole life story to me every time we worked together. We knew, you know, where we were. So it was very important to me that clients of Bell's, even though now it's a larger organization, still feel that personal service. So what we do to kind of combat that is to make sure that each client has a dedicated account manager, and that is one person who looks after them and does everything for them, so that they're not having to go around in circles or be passed from pillar to post. Of course, there are other people involved in the delivery of the job, so there might be, we'll have payroll team members, bookkeeping team members, but in terms of the client experience, that's predominantly with their client manager, which seems to sort of work really effectively. On the acquisition side of things, there have been many challenges, and I think a lot of that relates to the fact that you're taking a business where you have a group of staff members but also clients who didn't choose to work with you and you didn't choose to work with them, so you're having to try and make sure that you're meeting their expectations whilst also implementing changes, be that digitalization or moving premises or whatever that looks like, so that the business fits in with your overall strategy, but obviously being very mindful that it's a service-based business and honoring those relationships and the loyalty that those clients have shown that business. So yeah, I'd say those were the two sort of main challenges that I've faced over the years.
Okay. And so what are your plans over the next few years with Bell's Associates into accountants in terms of growth?
So my personal goal is to be the first sole female director to get into top 100 accountancy firms in the country. I'm probably about halfway there, but I'm hoping that the next phase won't be as long as the first phase, if you know what I mean, because I think that a business builds momentum as it goes along. As you have more clients, you have more recommendations, you have more experience, and hopefully you can move quicker and attract those bigger clients, bigger deals. So yeah, that's where I'd like to get to, but there's no sort of set time scale on that. My daughter she's starting school in September, so that's I've got to be mindful that I need to be around for her for school pickups and all that sort of thing. So I don't want to bite off more than I can chew in the very short term.
Definitely. Well, it sounds like an exciting thing to aspire towards anyway. So in terms of the clients that you work with, something I was interested in discussing was kind of the most common problems that you see, because although we don't offer the same kinds of services, you and I, we work with the same types of clients. And so I'm wondering whether the problems that we see people make are actually the same, or whether there's some differences there.
Definitely. So I think a lot of the issue, it's interesting you mentioned something about the differences in what we do, because I think a lot of the time what a client expects from their compliance accountant is not necessarily realistic in terms of the skill set. So lots of clients probably have an expectation that an accountant's going to do really in-depth analysis of their numbers, tell them how to grow their business, tell them what not to be doing, how to become more profitable. And whilst there are, small things that accountants can advise in terms of, maybe putting project costings onto their different services and products that they sell, so that they can identify what's making money and what isn't, that real sort of in-depth advice that comes down to much more sort of what you guys do. And I think businesses don't necessarily know when they've hit that stage, so they rely on an accountant to say, actually, you now need more than a monthly profit and loss account. You need a bit more complex management information and some real sort of advisory work with someone that can sit with you on board level and advise. And for those clients who are prepared to pay for that advice, it's absolutely a game changer for, scaling their business, or indeed getting a business off the ground on the startup side of things. But it's not realistic to expect that for a basic, compliance fee. That might have suited them at the beginning, possibly if their business model was quite simple and all they really needed was year-end accounts and tax returns.
Yeah, I completely agree. And that's actually a common question that I get with potential clients or clients. And when I sit down with them and we dive through, we go through their numbers and potentially find some issues, pricing issues, contract issues, whatever the issues are, cash flow issues as well. Very often there's kind of a light bulb moment where they think, why did no one tell me this? Shouldn't my accountant have told me this? And I often have to say, no, because your accountant's job isn't to do this with you. Like, a lot of the accountants do this as an additional service, but you're paying your accountant to file your taxes and tell you how much tax you have to pay, and the chances are they're doing that very well. So yeah, there is a big educational piece there, in that a lot of business owners think their accountants are not doing the job they're supposed to be doing by not telling them these things, or not by not offering these additional services. But that's definitely not the case most of the time.
That's right. And obviously, you and I have spoken a few times, Tom, and I've mentioned to you when I personally consult with clients, that consultancy more often than not is my own experience that I'm applying. It's not necessarily what I learned in accountancy school, which is how to fill in the forms and minimize tax and all of that kind of thing. So they are definitely sort of two different things, really, because a lot of the time what an accountant is doing is, in hindsight, it's just recording historic transactions, whereas what you need is somebody who's live, with their finger on the pulse, so to speak, so that they can actually assist the business owner to make decisions around what they need to do and what's the right time to invest in that asset. Sometimes cash flow problems can occur very, very quickly without that planning, because all of a sudden they realize there was this, big unexpected cost, or, they took their eye off the ball when it comes to their debtors and they haven't collected enough money in. And it's so easy to do. I've every sympathy, because I think whilst finances is very, very important, it's the lifeblood of a business owner, especially if they're one man band, is also dealing with a million other things that also require their urgent attention in terms of the day-to-day operations and all of those lovely things, marketing and admin and compliance, if they've got a regulatory body or anything like that. So yeah, it's a challenge to keep your eyes on everything. So you need to surround yourself with professionals in their field, really.
Absolutely. And we haven't touched on bookkeeping. Do you do bookkeeping as well?
We do, yes. We're an all service firm. So we do payroll, bookkeeping, filing of the VAT returns, company secretarial. So obviously that's filing all of the documents at Companies House if you've got shareholder changes, director changes, things like that. And then, of course, the personal tax return for the individual directors as well.
Okay. And do you find that very often you'll come across a client who has been doing the bookkeeping in-house, either themselves or a family member of the business owner has been attempting to do the books for a while, and then they come to you once things are in a mess? Is that a common one that you see?
Yes, yeah, we do. We do quite often speak about the benefits of outsourcing bookkeeping, because whilst it's brilliant to have an in-house resource at your disposal, the issues arise when nobody's necessarily watching over the quality control of that person's work, or they go on holiday, or they go long-term sick, and all of a sudden there's no handover for a new person to kind of pick up on. Whereas, of course, if you're a business providing a bookkeeping service, it's our responsibility to provide cover, so we'll make sure that that's absolutely continuous. We'll also, give advice. So as accountants, it's important that we make sure that things are allocated in a way that is suitable for HMRC, but also useful for the business owner. And quite often people find they save a lot of money on their year-end accounts by having their bookkeeping done by their accountant, because we've done it all accurately. It's all reconciled in the way we'd want to see it for the purposes of the year end. So yeah, we do see that there's issues, and we quite often sort of pick up the pieces of that if somebody's sort of moved on unexpectedly, or people don't always honour notice periods and all that kind of thing, which can be quite challenging.
Yeah, definitely. And do you frequently find that business owners don't review their numbers, or they don't know where they're at financially in any given month or day, for that matter?
Yeah, definitely. We've a number of times sort of gone through an upsell exercise for clients who don't currently have management accounts from us. And when I say management accounts, I'm just talking sort of basic profit and loss. They just don't get anything back apart from their VAT return. And we're sort of big advocates of saying you should be reviewing this at least on a monthly basis. But there are many people, some of which I understand, because I think if your business is very, very stable and samey and it's just not very up and down, and you're not looking to grow substantially, then maybe there's less of a need for it. And actually you're quite comfortable that you have recurring revenue and there's nothing needs to be looked at. But most businesses, I absolutely think, could benefit from a review of their numbers, and that can be quite bespoke. You can work with a client to say, what numbers do you want to see? Because one of the problems I think that we have is that people will come to us and say, well, I want a breakdown of these numbers. And the problem is everything's been entered just as sales, because there's been no means of actually identifying what the different products and services are within Xero or QuickBooks or whatever software the person chooses to use. So then we're not able to give reports on what they're asking for. So it's all about how that information is input in the first place, which is kind of a collective effort between the client and the accountant, maybe the FD as well, to make sure that you can get meaningful information out, and maybe a tax estimate, so there's no surprises there as to what that might look like also.
Yeah, and on that point, I definitely agree that they should be reviewing their numbers every month. But what I often find is that actually they don't understand the difference between, say, the income statement versus the balance sheet versus a cash flow statement. So having someone there to explain the differences and why cash flow and net profit are not saying the same thing, that can be really important, because these financial statements, they were invented by accountants for accountants. And so for anyone who isn't familiar with how they work, it can be a bit of a difficult thing to get your head around.
Definitely. And we do find ourselves in year-end meetings, having conversations about where's the money gone. If we're telling a client you've made £100,000 in profit, they're sort of going, well, why haven't I got £100,000 in the bank then? Why have I only got this amount? And you sort of have to explain that out of there comes directors' drawings, comes loan payments, comes tax payments, all of these sorts of things. And then you sort of see the penny drop, or there could be money tied up in debtors. There's all sorts of places that money could be, as you know. So yeah, it's when you're able to sort of translate that information in simple terms, or even just the definition, a profit and loss, understanding that covers a period in time, and then the balance sheet's more of a snapshot, on that day, what did it look like? And you can sort of see then that, yeah, their understanding. And it's really important to have that understanding, because they are ultimately responsible. I think a lot of people think that, if they've got an internal bookkeeper or an FD or an accountant, it's their responsibility. And actually, it's always the company director's responsibility. So they should, feel really comfortable and free to ask all of those questions to make sure that they are able to verify that, yes, this is accurate, and not just sort of sign it off on someone else's word.
Absolutely. Completely agree with that as well. And then finally, the other thing that you do, which we haven't talked about much, is tax. What are the main kind of mistakes that you see people making around tax?
So I think it's more just so that I have a saying about letting the tax tail wag the business dog, and that not being a good thing. So one thing that we don't promote at Bells is for people to spend loads of money in order to avoid tax. We do have business owners who say, well, should I buy a new vehicle because my year end's coming up? And I go, well, does the business need a new vehicle? Because if not, then no, because you're never going to pay more tax than you're never going to get as much tax back as what you spent. So I would far rather you kept 80% of the money and paid 20% tax or whatever, rather than bought things that you didn't need. So it's much more about being as tax efficient with the wealth that you are generating than it is just spending money for the sake of it. So really good tips is things like pension contributions. That's a fantastic way to effectively, the business owner is extracting money for their own personal benefit. They're building their own personal wealth, but that is tax deductible, for corporation tax purposes. So those are the things that we would encourage business owners to look at, as well as obviously timing. If they are going to purchase an asset and the business needs it, then there will be a better and worse time of the year to do that in order to get the tax relief quicker. Maybe they might be entitled to R&D tax credits relief and things like that. So yeah, once you've looked at all the legitimate ways of structuring the business to save tax, it's then about, well, what else can I claim for that benefits me as a director? That's really how we would advise approaching the whole thing.
Yeah, and just to be clear, when you're talking about the pension contributions, for anyone who doesn't get how that works, you're classing the pension contribution as a business expense, so it's tax deductible, and then obviously you don't pay income tax because it goes into your SIP or whatever pension vehicle you've got set up. Yeah,
that's exactly right.
Great. Any other tax mistakes that you see people make? I think a common one perhaps is an overdrawn director's loan account.
Yes, yeah, that's one that's quite common. So that's when people are taking money out of the business throughout the year and then waiting till the end of the year to declare a dividend, and then unfortunately realizing that there's not enough profit within the business to cover the overdrawn loan account, and there are tax implications to that. So again, that's really about planning, isn't it? And it comes back to your point about making sure you're reviewing things on a monthly basis, because if you're looking at the balance sheet and P&L regularly, you'd know if you'd gone into overdraft, and you'd know you might need to change the way you're remunerating yourself to avoid to avoid that position. Whereas if you look at it at the end of the year, it can be too late. And one of the exercises that we do with business owners as well is to work out, say they want to take out an additional 10,000 a year out of their business because of, new expenditure, I don't know, school fees or something. We'll let them know how much in turnover based on their net profit margin that they would actually have to generate in order to do that, because of all the tax that's got to be paid. Got to pay personal tax, got to pay corporation tax, got to cover all the overhead. So in order to actually be left with a net of the additional 10,000, there's a lot of implications, and that will vary depending on the margins within that business itself. But it's a really good exercise to run through.
That's a really good exercise. Yeah. I'll give that a go. And then the other thing that I see quite frequently is not putting enough money aside to cover the last period's VAT or corporation tax bill. And so I suppose that's more of a cash flow issue than something that you would be concerned about. But when it comes to them not being able to pay it, that's something that you deal with.
It's a big challenge as well, because I think HMRC are to some extent the easiest creditor to knock, because they are quite slow on the uptake in terms of realizing that this money hasn't been paid, and then they'll send a statement, and then they'll send another statement. It'll be a good few months before they actually sort of take any real action. But the problem is that by that time they can have racked up a bill that's like a mountain to climb. It's a hill they can't overcome. And HMRC, of course, are in fact priority creditors, because they see it as that money was never the business owners to spend. That when you're registered for VAT, you're effectively a glorified tax collector. You are collecting the money on behalf of HMRC, and it's your duty to pass it over. So if you choose to do something else with it, whether that's working capital or your own drawings, obviously that can potentially threaten the limited liability status of your limited company, because the revenue can actually say, well, you are personally responsible for this, and therefore you need to put that money back in and pay them. So really HMRC should always be the first priority, but that's very difficult in practice, I think, for lots of clients. And a really simple way to overcome it is just to put the money aside every month and say, well, this is how much sales we've collected. That's how much of that is VAT. Let's just bank it and know it's there, because it's going to be paid in 3 months' time, regardless, Yeah.
Do you mean you open a separate bank account called VAT? Yeah, that's exactly what I recommend as well. Yeah. And the same with corporation tax. As soon as the end of the year is done, put the money in a separate bank account or pay it.
Yeah, exactly.
Yeah. Okay, Jo. Well, thank you very much for all of that. There's a huge amount of value in there and tips for any business owner listening to this. Is there anything else that you want to share?
No, I don't think so. So I think it's been a really useful chat to sort of just thinking about the challenges that business owners come up against and how we can serve them better. So looking forward to doing more of that together, really.
Thank you, Jo. So how can anyone get in touch with you who want to?
So LinkedIn's a really good way. Obviously, I try and post as much sort of useful content on there. So that's Joanne Bell at Bell's Accountants. Should be able to find me. bellsaccountants.co.uk is the website if you're looking for an accountant. It is very easy to change accountants. People do get worried about it, thinking they're going to have to provide 20 years worth of backdated records. But actually, it's a process called professional clearance, which the two accountants deal with between themselves. So if you feel that you've outgrown your current advisor and you're looking for a new one, doesn't necessarily have to be Bell's, but you're not tied to dealing with the same advisor if you're not feeling you're getting that proactive advice. All you need to do is notify them that the new accountant will be in touch, and all the handover is done for you. So that's really useful. And there's more information about that on our website. And then finally, there's my personal website, which is joannebell.co.uk. And that's more about my own services in terms of consulting. If a client's looking to go down the acquisition route, I do consult for other accountants as well who are looking to scale their practice quickly. Obviously, again, a lot of that's based on my own experience, but I really like working with other professionals, and we all do different things. So it's useful to be able to pass work as well if there's stuff that's not suitable for us.
Right. So we'll put links to your LinkedIn and websites in the bio anyway. So it'll be very easy for anyone to get in touch with you. Jo, best of luck with Bell's Accountants over the next few years, and looking forward to having a chat with you again soon.
Fabulous. Thank you so much, Tom. You too.
Cheers, Jo. Thanks for listening. As I mentioned at the beginning of the episode, this podcast was created to celebrate the success stories of seven-figure business owners, giving them a platform to share their insights and lessons learned in order to inspire other business owners. As well as that, it's an opportunity to build new connections. So if you're a seven-figure business owner or someone who works with seven-figure business owners and you're looking for introductions to potential stakeholders, strategic partners and clients, I'd love to hear from you or have you on as a guest and see if I can help make those connections for you. Just go to synergycfosolutions.co. That's synergycfosolutions.co and click podcast. On that page, you'll find the link to apply.